Daniel Gamba, in the past 6 months, the iShares Germany ETF, this is the HEWG, is flat. But the hedged ETF, this is the HEWG, is up about 12%. So I guess the jury has come back with its verdict and hedging wins, right?
So the hedge version is done tremendously better. Any of our hedge ETFs have beaten their unhedged version. And it's done it because of the appreciation of the dollar. So the dollar is at record highs relative to the euro and relative to the yen. And in the case of Germany, is actually shown with the performance numbers.
Now, is it the same stocks in each of them? The only difference is the hedging. Why don't you talk about a little bit how it works, what's in these portfolios?
So these portfolios actually take advantage of the underlying ETF. So they basically carry each of the underlying securities that are held in each of these ETFs. So they have the same names, BASF, Daimler Chrysler. They have the same names in each of these ETFs. And the only difference is that they include forward contracts so that they can hedge the underlying currency. And as you mentioned, given that the euro continues to depreciate, the dollar version of the ETF actually it's suffering as a result of that.
And you're also seeing that in the yen. The yen's now 120 to the dollar. Over the past year, you've seen the HEWJ, which is a very popular ETF. I mean, that is up around 12%, but your hedged is up about 23 or over 20%. So are you cannibalizing your own business? Are people just saying, you know, I'm going to take from the HEWJ and put it in the HEWJ?
So people are doing both. So some people are people who want to have increased exposure into international because, you know, last year was all about the US. People really put much more money to work in the US. This year is actually been the flip side. More people have been putting money into Europe, and some people have been putting more fresh money into Japan. So in some cases, they're doing unhedged. In some cases, they're trying to actually see how much to unhedge and how much to hedged. And we have people who have done 100% hedged, and there's people who have done, most people have done 50-50, 50% unhedged, 50% hedged.
Well, it's hard to know how much further that the dollar can strengthen or the euro is going to weaken because you're pretty close to parity. It's now $1.10 per euro. So how much more do you think it can go?
I think people are looking more as a risk mitigation strategy. So when people look at the ECB continue to ease and the US eventually coming back into higher yields, most likely, you know, sometime in 2016, when you look at that, you know that the dollar is just going in one direction. So as the dollar continues to strengthen, these instruments will actually play to the advantage of the investors. There's a reason why investors are not doing necessarily 100% hedged. People are normally, the clients we've seen, they're doing, we just have a huge client put a $500 million trade into HEWG, but they did $500 million HEWG, $500 million HEWG. They're playing both, and they're just trying to have a little bit of a cushion. 50% hedged is a good proxy to actually be protected.
And then finally, you can play all of Europe. You have the HEMU, and you can play emerging markets, because I know the EEM has always been very popular. Now you can play the HEEM. So you have these things all around the world, right? It's all about the hedging now.
So we have the dominant franchise for investors who want to invest internationally. So we have emerging markets, we have Europe, we have Germany, we have Japan. So investors can actually do the unhedged version, especially if you're looking for the long term, or they can do the hedge version. So people are doing both.
And when you say people, are you talking about institutions as well as individual investors? Are these for everybody, these funds?
These are for everybody. We have flows. I would say predominantly 70% have been more institutions, pension plans using them a lot, asset managers using them a lot, but also a lot of the retailers, advisors are starting to use them because anyone who has about 15-20% invested outside the US should be looking at hedge versions to complement their portfolios. It's very important that they look at both aspects because currency does have a big impact on your returns.
All right, thanks a lot, Daniel.
Thank you very much.
And thank you for watching The Street.